This has potential upside of 3x to 8x. Now, with options, remember. All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to share with you an option play that I'm doing. This is a swing trade on a company that I believe everybody knows, General Motors, stock ticker GM. So I'm going to spend a little bit of time talking about General Motors, but I mostly want to focus on the potential swing trade on an option that I'm looking at. So this is not our normal content, but I personally do a lot of these swing trades. So if you're interested in seeing more content like this, please drop me a note below and let me know in the comments section. Also, don't forget to subscribe to the channel and hit the notification bell. And of course, if you like this video, please smash the like button. All right, with that said, let's take a look at General Motors. So today is February 8th. It's the middle of the trading day. General Motors is currently down over 4%, 4.4% right now, trading at $48.47 at the moment. So if we look at their 52-week range, it's $47 to $67. So they are not at their 52-week low, but they are very close to their 52-week low. And when you look at the chart, you're going to see why I believe there's a buying opportunity right here. I want to stress, especially with this one, that I'm not a financial advisor and this is not financial advice. Swing trades come with them a higher level of risk and reward, so please be careful. I'm going to show you what I'm doing, but you don't have to do what I'm doing. Okay, so just a couple of quick facts about General Motors. They have a market cap of about $70 billion, and that leaves them with a PE ratio of just over 7. So that is a very, very low PE ratio, particularly since on a going forward basis, more and more of their business is going to be in the EV sector. It's still a small part of their total business right now, but they're moving in that direction, as is the whole market. This is the trailing PE, and the forward PE is about the same, and I think that that is very low. It's much, much less than their closest competitor, Ford. If we take a quick look at Ford, so Ford and General Motors have been competing for 100 years. Their PE is 24. So again, a PE of 7 to me is very, very low. GM is very near its 52-week low. These are some of the things I think that are setting up for a positive swing trade. I'm going to show you just a couple other things, and then I'm going to get to the option. Okay, GE already announced their 2021 earnings for the year, and they did very well. Their earnings per share were $7.07. Their revenue was $127 billion. They're looking to grow about 22% in this coming year, 2022, and another 7% in 2023, but that's a bit far out, so we'll see what happens. I suspect that growth will be a little better than that, but this is significant growth for an 80 or a 100-year-old company. And again, $154 billion makes them one of the highest top-line companies in the world, just as far as the amount of revenue they have. But I want to take a look at income and cash flow, because these are other very positive signals. Now, I will tell you, their stock went down recently on their own earnings, even though their earnings were excellent. Everybody's very worried about the chip shortage, so General Motors is not immune from that. So there's been a little bit of downward pressure as a result of that. And then a few days ago, Ford reported their earnings, and they came right out and said they are slowing down production of the F-150 as a result of chip shortages. Ford took a giant hit for that, and in sympathy with that, General Motors has been trading down. So there's a bunch of downward pressure, some of which does have to do with them, some of which is really indirect from their competition. But as you saw, Ford is trading at a 24 PE. General Motors is trading at a 7 PE, so they've already been priced down significantly. I want to just take a quick look at their financial statements. This is their 10K for 2021, so this is their SEC filing. They've already reported. There's the $127 billion in revenue that we've already talked about. But more importantly than that, I want to show a couple things. That leaves $10 billion in net income. So that's where we saw $7 a share in net income. Well, that's $10 billion. Not a lot of companies make $10 billion. This company is a monster. And you can see that's up dramatically from 2020, where it was about $6.4 billion, which was similar to 2019 at about $6.7 billion. So they've made a big leap forward in 2021. And remember, they're hoping to take this 127 and bring it up to the 150s this year and the $165 billion range next year. So that is some significant growth, and $10 billion net income is obviously an outstanding result. Now I'm going to go through their statement of cash flows for just a minute, and I want to focus on cash flows from operating activities. So this is cash that they generate from all of their regular business. So in 2021, they generated $15 billion of cash from operations. So this is a cash flow positive company, and that is an understatement. Now, if you look right below that, cash flow from investing activities. Investment can and does include all property and equipment that you're buying. So among the many investments they're making, they have very, very significant investments into their EV sector. So they're generating $15 billion a year in cash. They already have cash in the bank, so they're taking basically 100% of that and investing it into the future. So this is a trend that you like to see from a company. And again, they're more and more getting involved in the EV sector, and obviously that is a big piece of the future of car sales. Now I just want to take a look at the chart, and then I'm going to show you the options that I'm looking at trading. So for me, actually, I think General Motors is actually a good buy and hold. It's a large cap company, and I don't do a lot of trading in the large caps. However, I am thinking about buying and holding this one because I do think there's very big opportunity in that. But in the meantime, what I like to do with these large cap companies is look for potential swing trades and look for them on options, which is usually a leveraged play. So having said that, everybody, please be careful. Options are much more risky than just buying and holding a stock. All right, so you can see they've gapped down today. They were at about $50.83. And they gapped down to somewhere trading in the 48s. They got as low as $47.59 today. They're trading at $48.74 at the moment. And again, this is the middle of the trading day, so I don't know where it's going to be at the end of the day. But if you look at this red line, which is what they gapped down to today, this red line is basically support for the entire previous year. So, all right, so this red line goes back to January 14th, 2021. So that is about 13 months ago, over a year. And you'll see over the course of that year, this line held as support right here in late January. We didn't really get anywhere near it until August of 2021, and it kind of bounced along this line. This did candle wick down to $47.07 on August 23rd. So that's its 52-week low, but that was an intraday low. It still closed above this line of support even on that day. Tested it all the way through late September, and then a big run up since then. You know, the next couple of dips got nowhere near these numbers, and now on this dip, it has gapped down to exactly this spot. So for me, this is representing extremely, extremely solid line of support. I'm going to draw a line right there. That's at $50.53. You can see that this stock spent probably 90 to 95% of the last year above that number. So there's your next line of support. Only a few times did it gap down, once for a stretch in August, and now it just jumped down there today. I'm expecting this to get back to its previous line of support, which is over $50. So for that reason, I'm looking at some $50 options. Okay, I have two options that I'm looking at. One is fairly short term. This option expires on March 18th, so that's only 5.5 weeks from now. So that is a very short-term option. Like I said, General Motors does tend to trade up and down quickly. So I'm considering this, but this is very risky. So again, this is not financial advice. I would not necessarily do what I'm doing. I have another option that has a lot less risk that I will show you next. But I'll tell you why I'm looking at this option. It's trading at $1.96. It's down almost 40% on the day today. If I go to this chart here, you'll see that on February 1st, this was trading for $5.90. That was exactly 1 week ago from today. And that is basically a triple if it can just get back to where it was trading 1 week ago today. So that's why I'm seeing a lot of upside. Past that, on January 4th, so 1 month ago, so that's still within the time frame. We've got 5.5 weeks left on this option. 1 month ago, this option was trading for over $16. That's over an 8x from where it is right now. This has potential upside of 3x to 8x. Now, with options, remember, this expires in 5 weeks. So the flip side of that is the potential risk is 100% of the money that you invest. So that's always important to remember. So that's why I look for options that have some type of 3x or better potential upside, because I know my downside, unless I'm willing to stop out, which you can do as well. You can put a stop loss at, at a 50% loss. So your downside is 50% and your upside is maybe a 3x or potentially on this one, an 8x. So again, this one comes with very high risk. So please, this is not financial advice. I'm showing you what I'm doing, but I am looking at another one as well. This is the $50 strike point as well, but this one expires on May 20th. So there's over 3 months left on this option, so that's a little bit better. That's still a fairly short-term option, but 3 months is a lot better than 5 weeks. This is down 24% on the day today. So it's trading at $3.80. So if I do the same analysis, if I go back to just 1 week ago, this was trading at $7.40. So that's almost a double if it can just retrace its steps back to where it was 1 week ago. If we go back to where it was trading on January 18th, which was less than a month ago, more like 3.5 weeks ago, it was trading at $10.69. So that's just under a 3x from where it's trading right now. So you can see that this one has more like a 2 to 3x potential, but you have much more time. You have more than 3 times as much time on this option. So this one is a little safer. I'm looking at both of these. I have not bought either of them yet. I may buy one, I may buy both, I'm not sure. And again, this is not financial advice, so you don't have to do what I'm doing. The other thing is, I do like General Motors as a buy and hold potentially, although it's not my typical stock inside of my portfolios. So there's a lot of different options here. Please do your own due diligence and decide for yourself what makes sense for your portfolio. So that's what I have for you today on General Motors. Thanks so much for watching, and we will see you in the next video.